Hi, welcome to the market alert for Thursday, the 31st of March 2016. So the market moved higher yesterday in the pre-market session following Yellen's comments at the New York Economic Club, which is basically the Mutual Appreciation Society for Economists. And as it says in Zero Hedge, it's a big scary world out there. Bank of America warns and only Janet can save us. And she has done her best over the last couple of days. You've seen the market moving to the highs there, the market continuing in the initial part of the trading session as well before we saw some weakness come into the market. This was ahead of the release of the crude oil inventories, which came out less than actually forecast, which is unusual. And this should be a bullish indication, but here we see the market trying to rally back up, failing, and then giving a sell signal. This sell signal is invalid because it's close to the high impact economic news item, that is the crude oil inventories, which has now been upgraded from medium impact, which we never used to take any notice of, but now dominates the market. And if you look at the crude oil price, now you can see it seems to have turned from this rally that we've seen of $12 in the previous month. So that being the case, I don't know why, but there's no reason why anymore with these markets. But we see the market moving lower after the crude oil inventories come out lower than forecast by 1 million barrels. Maybe they ramped up the forecast to make it look better. I don't know. But we see the market moving lower anyway as a result of this. A nice profit on this trade. Then later on in the session we get another sell signal, but it's in the quiet period. This one results, if you did take it, in a 24-point loss, which was then made up by the end of the session here. So a profit on the day, but not too much movement if you actually look. Not even, probably just over 100-point range there. If we go from the high down to the low, that's just over 100 points there, 114. So the market not doing an awful lot yesterday, and on the overnight market also even more quiet. And if we have a look at the daily chart, we can see that the market is currently trading sideways. And I'm just going to zoom in on this a bit as well, just to have a look at more detail inside of here. So you can see the market coming off the highs here, and this is generally indicative with the market struggling to move higher and finding a top. So it will be certainly interesting to see how this actually pans out, and also given the weakness now in the crude oil market as well. And that, of course, along with the implied volatility, which we'll look at in just a moment. So the market's starting to show some sort of weakness here. And if we have a look at the news for today, just to see what's going to drive the market, we've got Carney speaking at 8 a.m. Well, nobody really takes any notice of what he has to say. And that said, it's likely they're going to use whatever he says to try and move the market back up. So watch this 17,746 area. It's going to be crucial for this market. We've also got another central banker out tonight as well. Dudley is going to speak. I don't know whether he's sort of like the right-hand man to Yellen, or it's Fisher. Oh no, Fisher's since recently has retired from the Fed, which is why he made those comments about we pump the market full of cocaine and heroin and it's being maintained on Ritalin. It's amazing what they say when they leave office, isn't it? But anyway, that aside, Dudley is speaking at 10 p.m, so the market will be closed when he actually speaks. Again, expect the market to move high. It must be in a different time zone. 10 p.m. seems a bit late because they generally like to wheel these people out to speak and pump the markets up when they're still open, not the overnight futures market. And then in the implied volatility, we're seeing 1148 down again yesterday, even though the market moved lower. And now we've got a beautiful picture building here in the implied volatility. We're back to the lows where we could see some real carnage coming into the market during the month of April, and I think this is going to be the case as well, because there's nothing really to move the market to the upside now. We've had the interest rate decision last week. If anything we've got tomorrow is the non-farm payroll figures. That's the only big one for this week, and then really there's nothing for next week, so I would expect the market to start heading south and at rather a rapid rate as well within next week and the week after. I can't see anything else to move the market higher unless they're going to wheel somebody out to actually pump it up with some sort of rhetoric. So that's it for today. Things should start to liven up a bit now. We don't want them to liven up too much. Nice bit of volatility is great. We don't want these big spikes because it makes it very difficult. You get wide-ranging bars, as you know. At the moment, we just got to up the volatility just a bit more, which would be ideal. Right, that's it from me. I will see you in tomorrow's edition. Have a great day. As ever, thank you for your support. Also for watching. See you in the next one.